Okay, this one is on crypto more. So in 2017, I felt pretty good about that top because I was tracking Coinbase and all the other crypto apps, Binance, and they went from like out of the top 100 to like, I honestly got to have a screenshot. I need to dig it up. I think Android and iOS, if you can believe this, I think the top five apps were all crypto at one specific day at late November, early December 2017, if I can remember right. Pretty crazy. And that was like max euphoria. And I was like, this thing's. And we had a blow off top, like a euphoric blow off. So it was very easy to see. You're not going to get it exactly right, but you could just see this is trouble. And 2021 was harder because it was a slow roll off the cliff, much harder. Kept making you think it was going to be okay. It was going to be okay. So then let's talk about now. What's going on now? So we got two religions going. Michael Saylor's a genius. I definitely root for him. I really do. But that's not really what this is about. It doesn't mean I think it's always going to be okay what he's doing. But Michael Saylor's a genius, and Michael Saylor's running a Ponzi scheme. Those are the two religions. Passionate, smart people on both sides, like arguing on Twitter all day. I noticed that's happening just the last few weeks when his stock went ballistic, and he's offering convertibles that the companies basically looks out 5 to 7 years, and they offer shares, sell shares in the stock to buy Bitcoin. They package them as a fixed income instrument, kind of like a call option, but you get the money back from them, like they're backing it. And as long as that Bitcoin stays above that strike price in 5 to 7 years, everybody does well. But the problem is if you do a bunch of those convertibles at shitty prices, like say Bitcoin goes to 200,000, and they do a bunch of them, and Bitcoin goes to 70,000 and sits there for 8 years, then they're in trouble because they got to cough up Bitcoins to pay everybody back that you owe them that amount. It's 0% coupon. I'm pretty sure that's how it works, where you owe them that amount unless they take possession of the convertible, the stock above the strike price. I think that's the risk. Obviously, the existential risk is that Bitcoin blows up and then they blow up. But I thought that was going to happen under 20,000, and it didn't. He held on. Now his average price is in the 50s, low 50s, but he's doing a ton of these convertibles, and he's looking out 5 to 7 years. So he's probably thinking, if I go hard and go early and look out 5 to 7 years, I'm going to be fine, where I'm not going to have it be way below those prices when they expire. Unless I'm analyzing this wrong, I think those are the risks. So, okay, that's that, right? We know the existential risk. If it goes up, he does great. We know that. So there's like the middle zone, which it'll probably fall into. And it depends on timing, like how he's doing it. And leverage, if you get too big. Okay, so analyzing this from like the trader sentiment perspective, I am at a little bit of a tough spot here. I got long in the mid 60,000s right before the election, and my feeling on it was that. So let me just talk about differences between this cycle and last cycle. This cycle, all the people elected are pro crypto, generally speaking. Not all of them, but most of them. Last cycle, not happening. Right, everyone's against it. Gensler is out. Someone else is in. Democrats are out, who didn't really play friendly with crypto. Republicans are in, trying to embrace crypto, pull the talent into the U.S., even floating things like no capital gains, which I don't think is going to happen because it's unfair to the other assets. I just don't think they're going to be able to do that. Nonetheless, it's floated. They float the Bitcoin reserve. So the capital gains and the Bitcoin reserve go into like giddy, euphoric type topping talk, if you ask me. But everybody elected, and the SEC chairman and the congressman and the president, that is not, those are fundamentals, I think, that are important, that are a tailwind. The other thing is the accounting standards are going to change in 2025, so banks can hold Bitcoin on the balance sheet and market to market, which is super bullish relative to what has been happening. So you're going to start seeing like a lot of institutions who can hold it. And I don't want to get into all Michael Saylor's arguments, but I mean, all the big boys have kind of planted their flag on Bitcoin. So they're going to defend that house that they built versus the other coins, and probably versus itself as an asset class. So the asset class going to zero or going away is more unlikely by the day. Doesn't mean we can't have, the big pullbacks. So typically we've had 80% pullbacks every, I don't know, 3-5 years. I think with more holders that it starts to look more like a volatile version of gold, which means less less drawdown than 80%, maybe means 60 or 50 or 40, 20 to 60, something like that, not 85, which, because I just think it broadens out and it goes up a little slower and creates less volatility. Seems sensible to me. So I don't know if you're going to see it go down to 30,000 from here, but it could go down. It could do anything, but that's kind of my thought on it. So is this a top? Is this a bubble? Well, no one can say that for sure. My thought is that there's a lot of chatter right now about bubbles and people pointing fingers at like the big MicroStrategy CNBC moment where he was on there responding to Citron's short report. And people are looking at that as a major sentiment marker. And my sense is that these things are very important and those things are true, but it's early and it's going to go more first. That's my sense if I had to pick. And who cares what I think anyway? But part of me is considering getting out of half my position and just lowering my average cost way down and then waiting to buy the other half back and protecting myself in case I'm wrong. But I think that a lot of times when everyone worries about the market as well, in terms of comparing it to 2021, well, 2021 was a junk stock rally, electric vehicle chargers and Chinese car makers and all that stuff. And it got really giddy. Remember, everyone was trading 2021 on their phones and stuff. And then it blew up in 2022 and it got so negative in 2022. It was like '08 levels of negativity. It felt like people's on financial assets. And now everyone's like, it's 2021 all over again. Here it is. It's a bubble. But what I'm seeing on my screen is that the Mag 7 and the big boys had done really well the last 2 years, are slowing down and looking more overvalued. And then all the small and mid caps, like the ARK Fund and PayPal and Twilio and space products and all this stuff, are really picking up right now, and banks as well. Banks might be stretched, but so I see the market actually broadening out here, not looking ready to crash. I think it's going to get more bumpy if the big guys don't go with it. It's for sure going to be more bumpy because they control so much of the index weighting. But there's too much clamoring for a crash and a top. I think that buying long term here, like the Warren Buffett indicator, certainly doesn't look great. But does that mean that we can't go up for another year or two? Not at all. It totally doesn't mean that. So that's kind of my stance on it. Is I think there's a lot of movement right now and could be a lot of opportunity ahead. And I don't worry when Fed's cutting rates for the markets at all-time highs. I don't really worry about. I see it. I see the euphoria building. I see the finger pointing and the camps on both sides of it's going to blow up and all this stuff. So that's kind of my stance. Is I think we could, in a bumpy fashion, we could go a lot more before we blow up. But Bitcoin is a tough one here because I see signs of 2017 and 2021, but I also see fundamentals that are very different. So I'm kind of like, I don't know. I'm slightly more bullish still, but long term, I've always been bullish on this stuff long term. But yeah, and if you're in this stuff, you know how much you can come back, and if you camp on things, it gets very painful. So anyways, that's that for crypto. But that's just my market diagnosis right now. No definite answer, but those are my feelings on it. And I might choose to protect myself by taking half off because then I feel like I can't lose on the trade. I like to do that sometimes, and then I can just trade back into the other half, or maybe I miss it for a while. It doesn't really matter. There's always another opportunity. Don't want to get caught on dogma or narratives or like this is a once in a lifetime. There is no once in a lifetime. There's always something else. So it's okay. Other side that I want to talk about in this is, so I subscribe to all these people, and a lot of them are like, you don't know. Nobody knows how successful these people are or aren't, but seemingly successful people. And they're just picking oil drillers and buy, Mexican, Turkish equities and all this stuff. And I'm not saying that stuff's not going to do well, and then just always crapping on AI and Bitcoin. And it's kind of like, unless I'm missing something, we're sitting here having society kind of transformed into more of a digital age with the younger generation certainly more interested in ownership and behavior patterns with that stuff and using it nonstop. And then you have these crusty old dudes who study PE ratios and bank stocks telling you that it's all going to blow up and it's stupid, it's overvalued, and it's the biggest bubble. And I just got done telling you that I've been able to program like someone with a 10-year programming background. Probably not as clean, right? And not for a company, but for myself, I get what I need to get done, which is amazing. I don't know anything about this. How is that a bubble? I mean, maybe that there's an arms race that turns into a bubble, but it seems like productivity really is going to increase around the world from people having the ability to do stuff that they just couldn't do before. And maybe I'm in a bubble by using that in a way others aren't. I don't know. But my point is that just keep an open mind and don't get caught into either side of these camps, because there's like the camp that it's never going to end, which is more of a crypto thing when it gets going. And then there's the crusty old fart camp using, got the spreadsheets out, using all the ratios, not thinking about how things are changing and how the world's changing. I mean, 2% of Nvidia is the whole Turkish stock market. I mean, you could argue and say, I'm going to buy Turkey and short Nvidia because that's stupid. Okay, well, is it stupid? I mean, what if that keeps getting more and more extreme? Everyone makes a big deal out of small cap to large cap and US to the world. Yeah, eventually it'll change, but how long did they said that? 10 years, 20 years now in a row? Maybe not 20, but a long time. I think focusing on price action, building your own tools, and having a time frame and a risk management for everything you do kind of insulates you from a lot of this garbage. Arguing online. It's like we just went through it with politics. Now we're going through it with markets where it's like you get these two camps just shouting back and forth. And I think that I don't know, it's just stay curious, keep up on the new stuff, and tune it out. Don't worry about it. But I can't totally tune it out because I want to know when it gets really extreme and it becomes conventional wisdom that something's going to keep going up forever and it's the future. That's usually when the top starts getting put in. So the fact that there's a lot of fighting right now about the market and about Bitcoin tells me that there's probably more room to go because the trend is up and everyone's fighting it. And the Fed's cutting rates at all-time highs, which is a whole other ball of wax. So it tells me that we got more room to go. Is it with probably a lot more volatility at the same time. So yeah, I just got kind of pissed off, honestly, reading, getting a lot of this stuff, and just watching people chase just beating down shit with horrible price action on the hope that it's going to rally 20% or I don't know, it'll have a last gasp. It's not that those trades can't be good, or it's not that I do those trades sometimes too, but this predisposition to get annoyed and dismiss everything that has gone up a lot and just make a huge bear case because something has moved up a lot quickly isn't necessarily the right way to look at things. And to kind of open your eyes and be like,